From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 10, 2016. I hope you had a great weekend and are ready to get started with trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we'll be watching for entry and exit opportunities as we go throughout the week. Today, we are observing a bank holiday in both the U.S. and in Canada, which will likely see diminished market movements as we go throughout our day, so you want to be sure to use appropriate risk management strategies. And of course, you'll want to check your financial calendars for any upcoming releases as we go throughout our week. Let's get started here on the USDCHF, the US dollar versus the Swiss franc. Starting on the daily time frame, we have been in a wide angle range here for this currency pair for quite some time, really since the beginning of 2016. You see the black box here on the chart. The top of the black box up into the mid 9900s, the bottom all the way down into the mid to low 9500s. So we've been stuck inside this box for a while. Now, bringing it in a little bit closer, you can see this blue box on the chart, and we've been stuck inside that blue box. The green shaded area at the top, 9780 to 9800. The blue shaded area at the bottom, 9680 down to 9660. So we've been bouncing around in there. Probably most important today will be the green shaded area at the very top of the chart. You see the blue circle and the red box over here on the left showing resistance into that green shaded area, and we can even see last week, 1, 2, 3, 4 days last week, finding resistance right at the 9800 level and bouncing back down. Today, we're seeing the market challenge above 9800. Really, it's not the first time it's done this. So we need to be cautious in assuming that this is a breakout. You know, that's the worst case scenario at this point, is that we assume it's a breakout, turns around and goes back down like it has basically since August over here on the left-hand side where the blue circle is. So we don't want to assume this is a breakout. We want evidence and real clues that this is a breakout above 9800, 9805. So that's what we'll be watching for, especially as we get down to the smaller time frames. I do think right now the market is bullish rather than bearish, so we need to be watching for opportunities in that direction, which again will be clear indications of a breakout of the 9800 level. The purple shaded area not too far away, 9835, 9855 will be our next area of resistance, and again you can see that back here to the left, top of the blue trend line, over here also into the purple shaded area on the far left hand side. So that's clearly our next resistance, and of course through there we're back into the orange shaded area at the top. If we're going to buy anything, we want to buy on support or a break above resistance. So that's what we're watching for here on the dollar franc. Take it down to the 4-hour time frame. We begin to get a little bit more information about what's happened. You see the blue circle back here again, where the market found resistance into the blue circle and reversed and went back down. Well, found resistance and continued to go down. Red box is where it reversed and went down. So we need some real significant indications of a breakout. I think today, of course, the open and close above 9800, especially on the daily time frame, would give us some more confidence in that. Targeting the purple shaded area, I think we could easily target the purple shaded area today above 9800. So if you're going to buy it, don't buy it at the top of the candle. Take a look, zoom it in here. You're at the top of the big blue candle. Your risk is higher. You know, I think your risk at right now, your stop loss should be way down here towards where this red line is, our last low. So your risk is higher. So how do you make your risk smaller? You allow the market to drift back down to the green zone to make your risk smaller. So at least if you're going to buy this, let it dip back down. Be cautious though on a pushback underneath 9800. Could be another reversal here for this currency pair again. So if you're going to trade today's momentum, buy at the green zone, target the purple shaded area as your resistance. If you're looking to go short, obviously the purple zone, at least right now, would be your best risk reward for that. Let's take it on over to the euro dollar. Similar situation. We've seen the market contracting or consolidating within a period of congestion or range. We'll just take a look here at the blue box here on the chart, and really within that blue box last week we started looking at these two black trend lines as a descending triangle pattern. It's continued to play out like that, even though we found support into the bottom of the triangle and the bottom of the blue box into the support of our range right around the 1135, 1120 level at the bottom. Let's go ahead and zoom it in here now that we've seen that wide angle view. You see the black trend line coming down from the top, the one at the bottom along the green shaded area, the bottom of the blue box that you see here on the chart. We're challenging underneath the pink shaded area again, 111.70 today. We've seen it predominantly in a bearish pattern as it's been falling within the triangle pattern and pushing through supports. Of course, the green shaded area has clearly been support down here towards 1135. If we're going to continue to go lower, it's going to be an imperative that it breaks through there. Until it does that, we can't be sure that it's going to continue to pressure lower down through the 1100 level. So we need to watch that green zone. It's found a lot of support here. So if we're going to go short, it needs to break through there, or at least at this point, maybe watching for intraday breaks through the pink shaded area, which there is no open and close underneath here yet, by the way, the 1170 level. Let's take it down to the 4-hour time frame. We do see the market challenging underneath, again, the pink shaded area, but we've seen it do that before, right here and right here. So don't be too excited about this until we get some significant indication of a breakout underneath the 1170. At minimum, here on the 4-hour chart today, I would be looking for the market to open and close back underneath here to increase my confidence that we're going to see the market pressure back down to 1135, 1120. And of course, like I said, if we can ever see the market break out underneath 1120, we might look for the continuation of the downtrend. Now, if you're a buyer, if you're thinking about buying this currency pair, obviously the best risk reward opportunity to buy it would be back down here at the green zone, 111.35 for this week. Let's take it down to the GBPUSD. Of course, we've seen extreme volatility last week on the pound dollar, extreme sell-off, a crash of the British pound, testing multi-decade lows all the way down into the 1-2000. So we need to be a little bit cautious in selling this currency pair because we're at the bottom of multi-decade lows, and there's no real, I think, significant indication of reversal quite yet here for this currency pair to go back up. Let's zoom it in a couple of times here. Take a look. There's last week's candle. What a volatile candle it was, falling, let's see, from the top of last week's candle. Let's just measure from the top all the way down to the bottom of the wick. We're looking at 500 pips. Then it returned back up, about 300 pips or so. So quite volatile. Look at this yellow shaded area, 123.80 to 124.30. That's the yellow zone. That looks much more significant as we get down here to the 4-hour time frame. Take a look at it now. That makes much more sense as we get down here. Again, I think you want to focus in on the bear side, but I think it's a breakdown of 123.80 is really going to give you some high confidence that it's going to continue lower. And I harken back to the blue zone up here where it went into congestion, finally broke through it and went lower. So that's what we're kind of looking at today, just into congestion after the significant volatility last week. We need an open and close underneath 123.80 to give us confidence it's going to continue to go lower. Otherwise, turning back above the 124.30 level, top of the yellow zone, we could be looking for it to go back up. So really, I think this week we need a breakout of this yellow zone to give us any confidence on the pound dollar. Moving over to the USCAD, we've seen it challenging multi-month resistance highs over the past few days. Let's just take a look at the big black box here, showing us somewhat of a range here, a rising range, if you will, along that black trend line. Let's zoom it in one time. Here on the daily, you see the blue box up here at the top right. We've been challenging resistance highs here. We've seen resistance here below. Small blue box over here where the resistance high is at the green shaded area. We challenged it last week and came back into it. Let's zoom it one more time. There it is last week. We pushed above it. This week we opened back inside. So at least at this point, no real deal breakout above the green shaded area and the 132.65 level. So this week, and of course, we need to be aware that today we have bank holiday in both U.S. and Canada, but this week we'll be watching evidence of reversal from 32.35 to go back down, or we look for evidence of breakout finally above the green zone 32.65 for a continuation higher. Again, I don't think today's a good day to be doing that, but as we go in tomorrow or the next couple of days, we'll be watching for the breakout of this green zone. 4-hour time frame again. There's a little bit of a gap lower from the weekend, but at least at this point, we're stuck between the 35 and 65 level, and we need a breakout before we can have confidence in direction. Last week, we were studying potential reversal late last week because of the positive data we had out of Canada on Friday and the lackluster and missing the mark a little bit, missing the forecast a little bit on the U.S. data. We were looking for the fallback. Never really did that. It was a temporary pushback above, and now it's just kind of stuck inside the green zone. We need a breakout of that green zone this week before we make another move here on the US CAD. Moving over to the US yen, long-term downtrend. Last week we saw the market break above that long-term blue trend line, but it ran smack into the 100 period moving average. Let's zoom it in here. There's the 100 period simple moving average here on the daily time frame. Came up, tagged it, and fell back off of it. But we don't see a continuation. We see that big red candle, but not a continuation below the 103 level. That's the green shaded area. Look back here where the blue circle is. We see the market bouncing around here for a few days before finally breaking through. So for the day today, if we're going to see this go lower, and really this week, if we're going to see it go lower, it's got to get through 103 under the green zone if we're going to see a reversal for it to go back down again. Otherwise, sitting on top of that green zone today and going into tomorrow at 103.20 or so, we could be looking for it to challenge back towards the orange shaded area and resumption of this rising momentum that we've had for the US yen. And if the US dollar takes any kind of boost, we'll see that happen. Above 104, 104.20, and the orange shaded area will look for new resistance highs above that into the 104s or 105s. But right now, kind of in a little period between the green and orange zone, similar to what was over here at the blue circle. If you're a buyer, you're buying the green zone. If you're a seller, you're watching for the break of the green zone for the continuation lower for the US yen. Moving on to the AUDUSD, the Australian versus the US dollar, let's take a peek at the weekly time frame real quick. We've studied this in the daily trade room quite a bit. The long-term red trend line is very important to our trading over the past couple of weeks. Take it back down to the daily. Why is it important? Take a look at the current market, how it's been challenging that red trend line for several weeks now. 1, 2, 3 times coming back up into there. Now we're still underneath it. Little blue box over here on the right shows us a period of congestion, support, resistance. We need to break out of that little area. Let's go ahead and zoom it in one more time. We found support last week into the 76, 75, 85 level, the pink shaded area. No significant breakout underneath there. That's what we were looking for. A breakout underneath the blue box, underneath the pink shaded area, 75, 85 or so, for the continuation lower that it was momentum was pressuring that direction. Never really materialized. It didn't break out underneath it, and now we're just sitting back inside of it. If it reverses and goes back up, of course, this pink zone provides lower risk and higher reward, but I don't think there's any real significant evidence to that quite yet. We attempted to break down 75, 85 last week, didn't, so a good solid push underneath 75, 85 may give us our boost that we need for the US dollar to take a turn back down towards the 75, 40, 55, the yellow zone as our next potential support. By the way, 100 period simple moving average, well below the current market, so we still have some room to go before we would reach into that. And all of that hinges on that long-term red trend line. Take it down to the 4-hour time frame. Look at this. Broke out underneath. Volatility on Friday. Still holding inside the pink zone. I'm going to focus in this week on the bear side. Looking for it to stay within and under that pink zone. Breaking back underneath it. Heads back down towards the yellow zone or lower. Back above it, that's the risk, of course. Then we probably look for it to head back up here towards this purple zone at least into the 76.35 level before we reach our next resistance for the Australian dollar this week. Moving to the NZDUSD. Similar situation. We've been watching and following the bearish moves here on this currency pair. Trading it last week. Significantly profitable over the past couple of weeks for us. The blue trend line, probably the most important one to focus in on. But I do want to make note of the black trend line. We're coming closer and closer towards that long-term trend line. So we'll keep an eye on that to see if it touches down into that black trend line. We're toying around with the 100 period moving average as well right now. Take a look at that. We have been mostly bearish over the past few weeks. In fact, we've been studying the potential setup of the head and shoulders pattern, trading that, of course, the head and shoulders pattern, profit from the orange shaded area, the 72.80 level as it went down last week. It was a great trade from last week, but we're in a pretty interesting area here, right around the 100 period moving average. Let's go ahead and zoom it in. Take a look. Last week we set it out at the blue zone, hesitated, volatility from Friday, and now we're seeing the market pressure back lower again. You know, I always say this in the trade room. If you're going to sell anything, you want to sell it at a higher price. So it's coming close to the support lows into the 7100 level. It's becoming more discouraging to go short, at least at the current moment, because it's coming closest to the support low into 7100. So I'm getting a little bit discouraged about selling this again. I think it would need to go back up or give me some significant breakout below a support. But right now, just kind of difficult to go short here on the New Zealand dollar. 4-hour time frame, congestion around the blue zone from last week's volatility. You can see that right here. Is pressuring lower, of course. Again, like I said, it's difficult to go short on anything when it's close to the support lows 7100. So as long as it's this close to 71, I'm not going short on this currency pair. I need it to either go up again or break through 71 before I think it's going to go lower. But at least at this point, not very enticing to go short. No reason to go long. though. There's no reason to look for a reversal, at least at the current moment. So we'll keep an eye on it, but at least at this point, not really looking for any trading opportunities on the New Zealand dollar this first part of the week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.